Welcome back. Let's get to another corporate conversation going. The one we're talking about is Newgen Software. As I said, they reported numbers on Tuesday. Very strong set of numbers. The company's revenues went up by 23% in Q4 on a year-on-year basis. The margins too have expanded for the company to 32.65%, driving a more than 100 crore jump in the company. 100 crore profit figure for Newgen Software. If you could just get the numbers up for our viewers. Even for the full year, the company FY24 has reported a 28% top-line growth. Margins for the company expanded by 140 basis points to 23.2%. Driving a 42% jump in the profitability. To talk about the way forward, we have with us the CEO of the company, Mr. Virender Jeet. Thank you very much for joining in. It's been another strong quarter for you and a strong end to the year with a 28% top-line growth. How is FY25 shaping up for you, and what can you guide in terms of a top-line growth?
This has been a strong quarter on various fronts, and our traditional markets, which is India and Middle East, has performed very well. And we have also had kind of a, not muted, but typically a higher single-digit growth both in APAC and US. Next year seems to be fine. We are still, our traditional markets are doing well. The funnel out there is quite strong. We don't see any reason why we'll have any kind of slowdown in India or in Middle East. On the same thing, we think APAC, we are very hopeful that next year is going to be even stronger than what we are there. US is still a work in progress, both for us as well as the market still has not really come out. And for us, banking, we are trying to pivot from smaller accounts to larger accounts, where there is still a challenge in terms of deal acquisition. Speed has not picked up. So, but having said that, there's no reason why we can't maintain the growth trajectory we have. Whether we hit 24% or 27% or higher is going to be slightly difficult to predict as of now.
But is it at least safe to say that the company will continue to see about a 20% plus top-line growth in FY25?
Yeah, there's no reason we should not hit that number.
Okay. So let's talk about margins. What is the outlook there? Will EBITDA margins continue to be around 23%? Because, I mean, in the past, you've said that you'd like to maintain margins around 23% and reinvest the excess to drive growth forward. So what's the thought process now?
See, as I previously said, this is a high gross margin business. Predominantly, we sell products and licenses where our gross margins annually are more than 66-68%. And we have a higher investment in both R&D, which is roughly around 9 to 10%, and on sales and marketing, roughly around 22%. Having said that, any growth which is above our, what you call a budgeted growth of, say, 24-25% does expand margin. But we think next year we should be growing at a good speed, and we will be able to maintain 23 or slightly improve it. On the net margin side, we should be very close to what we have done this year, because next year our taxation rates are going to be slightly higher than this year. So on the net margin, we should maintain a 20% margin. The business can generate more margins because as I said, that we do have licensed business as a large part of our business, but we do aggressively look at growth, especially both in markets which are very strong as well as mature markets.
Sure. Mr. Jeet, EMEA and Middle East, I mean, this whole region has seen very, very strong growth for you. What is leading to this? And can you sustain this kind of a growth rate of 30 to 40% at the top line level here?
Yeah, it's been a very good market for us, and the leadership we have in financial services, especially banking and insurance, we have carried that very well in banking in Middle East. And the markets out there, both in Middle East, Oman, Qatar, in terms of Saudi, these markets have really accepted our digital products of digital journey, where we are trying to build digital lending platforms or trade systems, have worked very well. Markets like Saudi, which have really expanded over the last 3-4 years, have a huge potential. And we have established a very early lead in the market, and we are trying to consolidate on that. I'm very hopeful that next year we should be able to sustain these kind of growth rates in that market.
Okay, able to sustain, the kind of growth rates we've seen in the Middle East market. Sir, you spoke about pivoting away from smaller deals to larger deals. What is the average size of the deal right now, and how has it changed in the last 1 year?
So I think on an annual basis, we have increased our revenue per account deal by 29%. So substantially the new deals which have come at a much larger size than our traditional new deals. On the US, we were focusing on banking tiers, which are typically, less than $20 billion asset size banks. We have slightly moved away from that to focus on more up to $50 billion to $200 billion asset size banks, which is typically the pivot we are trying in US. But in other markets, we are already focusing on tier 1, tier 2 accounts. We have not gone to really tier 3, tier 4 accounts. Average deal sizes for us for any market in entry level can vary from $500K to $2 million. That is our entry point, but our account potentials can go up to $5 million, $6 million.
Okay, all right, got that. The US has been, work in progress, slow for perhaps a year now. What's your own assessment? Do you see a pickup anytime perhaps in the current year?
No, I think we on our own are not always waiting for the markets to require. So we generally focus on our own efforts. Being the size of the company we are not really connected to the market size globally in that manner. But as we had pivoted from smaller accounts to larger accounts, that transition is taking a bit more of time. We are hopeful that this year it is going to be a growth market for us and it will really do much better than what it is in last year. We have already got early signs of wins. We have made inroads into larger banks out there. The funnel is looking very positive out there. The only issue in those markets, our ability to predict the deal closure cycles, and the cycle times are slightly longer, especially when the market scenario is slightly weak, the cycle times become even more elongated. And our partnerships with large tier 1 global system integrators, also since we are a part of a larger deal, their deal cycles are pretty larger, long compared to our traditional deal cycle. So prediction of closures is slightly poor, but overall pipeline is quite healthy out there.
Okay. So just getting to the big picture now, Virender. Today, Newgen is about a $180 million revenue run rate company. What's the 3 or 5 year plan? When does the company get to $500 million? And what's the strategy?
See, as a product company, we always believe that, you will always get few years to really of a kind of a much more accelerated growth. And we are working on aggressive strategy, kind of a reset. I think we are in the middle of that phase right now. We have drawn an aspirational plan for ourselves. And of course, our plans are linked to reaching $500 million and $1 billion out there. Internally in our design right now, though, it's still work in progress. We do think we can accelerate that growth. Our internal commitments of delivering a higher growth are much more aggressive than the budgeted numbers or whatever target numbers. But unless we have a real visibility, kind of talking about those numbers may not be the right thing to do. It may give a wrong message. But internally, I think all the focus of the company is to build a $1 billion product company out of India in a horizontal space. And all our investments in terms of every return is all targeted for that. That's the only purpose of the whole leadership of Newgen, to really aggressively reach that goal.
Okay, just to sum things up, what are the 3 pillars on which you get to $1 billion?
So absolutely. So I think we are very clear on that, how it works for us. I think one of the biggest pillars on that is to really go and operate in the markets which have higher potentials. So US and Europe have the addressable market size is pretty large. So one is to make surely that we have a stronger inroad out there and have a more kind of a just fair of our market share out there. The second is typically to consolidate on banking. We have really gone and expanded deep into banking. Our new products in digital lending, trade, supply chain finance are really finding strong traction. So we are increasing the depth and penetration of what we can do in each account. The third most important thing, we have doubled down on building insurance as a more stronger vertical. Right now it's around 7 to 10% of our revenue. We want to bring it all the way up to 25% of our revenue. So we are right now aggressively investing in building the insurance team, the leadership, the product alignment for that, and really helping building the sales and marketing engine to do the insurance. And the last one is the horizontal plan. Our products are generally applied across all industries. Currently, our GTM is localized to around 3 verticals, but with more partners, more system integrators, building their stacks on our platform, we think that we can go and make inroads in other verticals. These are broadly the 4 pillars, and they are at different stages of maturity, and every time in a few years you have to reset them. So, but we are very hopeful that within these 4 things, we should be able to achieve our goals.
Okay, and what is your internal target? You said the aspiration is to build a $1 billion product company out of India. When do you get there? Internally, do you have any targets? And initially to start with, make it to a $500 million company and then $1 billion company.
It's difficult. I think, I think our board would love to do it in the next 2-3 years, but I think it's not going to be that easy. We'll have, but surely the next step is from here. We can easily think at $180 million run rate as we put to take the $500 million target. We are trying to draw numbers and draw a path for that. And then once we are there, we should be able to draw $1 billion.
Okay, so, that's how it's playing out. Thank you very much, sir. Great talking to you and good getting perspective, on all the topics we've discussed. Before we let you go, just to finally sort of round it up, new logo additions were 51 in FY24, similar to, 47 odd you added in FY23 and 53 in FY22. So are you going to stay around this range of 50s, or are you really planning to bump up this number in this year?
See, on the logo additions, we would surely love to have more logos. But I think what we have done is also, from compared to previous numbers, we are pivoting towards larger deals and slightly leaving out the smaller deals. So that is really, looked at absolute numbers, it does not make sense. But if you look at total booking from new logos, that's substantially gone up by 30-40%. So that is, having said that, we do believe that we have potential of going up to all the way up to 80 logos, at least, in coming years. So on the subscription side, it's a part of kind of a business model in which there's some amount of annuity which gets compounding every year with the sale of license or subscription. I think at a twice the size of the current company, we should be easily at 70-75% of subscription revenue or annuity revenue is what you call it. So I think both sale of licenses is converting slowly into subscription models. The ATS, which is the annuity level, is also increasing from accounts as we have more and more usage of the accounts. And the support model, which is typically a higher level of annuity, which gets built in the accounts, is also growing at a good, healthy speed. I think we should be easily able to target around 70% in coming 2 years.
Thank you very much for that. That is Newgen Software for you. Confident about growth rates sustaining. India, Middle East continues to fire for the company. US is still work in progress, but they're hopeful things will turn around. Margins should sustain at 23%. Excess margins are typically reinvested back into the business to drive growth. And the company's aspiration is to be a $1 billion top-line product company coming out of India. That's Newgen Software for you. And he also laid out the pillars on which the company will get there. Getting deeper into the underpenetrated markets, for instance, US and Europe, where their presence is much lower. Newgen's bigger in India and Middle East, but now they want to crack the code in US and Europe. We'll get into a break on that note. We'll discuss market technicals with Vishal Malkan on the other side. Stay tuned.